What's the difference between a mortgage rate buydown and a discount point? This is a question that's coming up more frequently because interest rates are higher than they were this time last year, and those terms are sometimes used interchangeably. Here's what you want to know. A discount point is a fee that's paid to permanently lower the interest rate for the life of the loan. A rate buy down will typically lower the interest rate for the initial term. So if you're at a 7% interest rate and you do a 2-1 buy down, the first year your rate would be 5%, and then your rate would be 6%, and then after that it would be 7%. Make sure you talk to your lender about the options that are available to you to decrease your interest rate, and then pencil out whether or not that makes sense. Sometimes in today's market, you may even be able to negotiate to have the seller pay for a temporary rate buy down. If you have any other questions, let us know. I'm Shannon with the Shannon Jones Team at Keller Williams Realty in Long Beach, California.